Now, other specific ISAs that are relevant to substantive procedures. There are a long list of these. I'm going to work through these with you. There are certain of them that I'm then going to go into a little bit more detail and others that I'm going to leave for you to go into the detail. I'm going to go through what I believe are perhaps the more important ones. Now, all of these significantly have quite big open book opportunities. So there could be a lot of flagging and highlighting that needs to take place for this lot. Inquiry of legal advisors. ISA 501 has got a couple of different elements in there, but the legal advisory one is the one that I want to focus on, and I will have a look at that. The use of external confirmations, so bank confirmations, debtors confirmations, those kind of things. There's a specific statement for that. I'm not going to look at it. That doesn't mean you shouldn't. Okay, you do need to flag it. It's a fairly straightforward statement. It's just historically, I don't often find questions coming through that require you to draft an external confirmation. The audit of opening balances, a fairly short statement and a fairly straightforward one, but I will have a look at one or two elements in that with you. Analytical procedures, there is a separate statement on that. I'm not going to work through that with you. There's not a lot in there. Again, from your side, have a brief look through it. Be aware of what is in there. The audit of accounting estimates, a very important one, ISA 540. There used to be two. There was 540 and 545. Looking at accounting estimates and then valuation adjustments. They've now combined them together in the clarity statements. But there's some nice open book opportunities there in terms of how to audit essentially any valuation adjustment. So anything, whether it's inventory provisions, accounts receivable provisions, legal claims that you're creating, provisions for restoration, any of those kind of entries, anything where there's an estimate. Auditing related parties, also quite a short little statement and some nice open book opportunities there in ISA 550. We'll have a quick look at that. Management representations, I'm not going to, mainly because you're not likely to be drafting management representations in an exam context. There are appendices in there giving examples of representation letters. Again, just be familiar with what is in there, but in most cases, the representation is going to form part of a standard substantive procedure to another account balance, or any account balance actually. Then the use of other parties, and I'm going to look at all three of these elements. The use of component auditors, or group auditors, ISA 600, internal audit in 610, and auditors experts in 620. Just note the wordings there are different to what they used to be. The clarity statements have done a fair amount in terms of making changes to these elements, these use of other parties. And then lastly, the auditing of derivative financial instruments. There is an IAPS in that regard. And again, from an open book point of view, there's some fairly nice stuff in there. So derivative financial instruments, you often would be perhaps potentially nervous about. You don't need to be. There's actually detailed substantive procedures even in that IAPS that you can obviously refer to if ever you're needing to do substantive procedures on derivatives. So let's then run through the individual ISA statements. 501, looking at litigations and claims. And again, remember I said there's a lot of open book opportunities here. So what I'm going to do is not work through the detailed statement with you, but I want to just flag for you where you need to go and look at for you to do your highlighting and your flagging. The first point there would be in paragraph 9, and then going into the detail in paragraph A18 in the explanatory paragraphs. The nice thing about that is it gives you a couple of procedures there around the completeness of litigation. So instead of having to remember those, there are 4 procedures there that you could go along and use to get evidence that all litigation or claims have been identified and recorded. It also gives you guidance in paragraph 10 around what to do if you need to communicate with legal counsel, so lawyers. And there are 3 points in there. Again, you can flag those, and you've got them if ever you need to describe procedures to communicate with lawyers. Generally speaking, where lawyers come into it, in your substantive procedures, you should be including these procedures to communicate with those lawyers. Also bear in mind that lawyers become experts. So not only would you be using 501 here, you'd also be going into 620, the use of auditors experts, and potentially it may even be around something that management have made an estimate for. So going into ISA 540 as well. And by taking the open book references out of 501, 540, and 620, you've got a lot of stuff in there to go along and generate a lot of ideas around anything to do with litigation and providing for claims. Okay, so there's the reminder, just obviously linked into the accounting considerations around creating provisions. Opening balances. Two main areas of emphasis here. The first one is that if the prior year balances are audited by another auditor, then essentially what you're doing is you're placing reliance on that other auditor, and you've got to then go to the guidance in ISA 600. Now be careful there. ISA 600 is worded the use of component auditors. The general context for ISA 600 is that it's group within groups. So it's the use of other group auditors. But there is a little paragraph in there that allows you to use the provisions of ISA 600 for any work done by any other auditor that you're going to be relying on as the main auditor. Okay, so 600 will apply in circumstances where you had a prior year period being audited by some other auditor. If it's not been audited by another auditor, then you would need to perform procedures on those opening balances. And there are some suggestions in there, paragraphs A6 and A7, as to what you might be able to do to get evidence about that. For example, some of the evidence you can get by looking at current transactions. So if you're wanting to prove the opening balance on accounts receivable, you could go and start matching receipts in the new year to amounts owing at the end of the prior year. And in that way, get evidence that the debt therefore existed at the beginning of the year. You could also, for inventory, do a current count and roll it back. And I'd say, tongue-in-cheek, whether you'd want to do that or not, that is a mission. We spoke about that in inventory. If you don't do inventory counts at year end, they're really difficult to go along and establish. And imagine a situation that now, I don't know, you're 3 months after year end and you're trying to get evidence not only about this year end's inventory balance, but about the prior year inventory balance. I mean, you can't exactly count now and roll back 15 months, taking out adjustments for transactions during that 15-month period. That's just probably not practical. I would suggest under circumstances like that, you're probably just looking at a scope limitation, and you'd have a qualification on the opening balance of inventory. Confirmations are another possible option to confirm old prior year balances. So if you've got opening loans, investments, leases, maybe even accounts receivable. If you could now, 15 months later, get guys to confirm the balance from 15 months ago, the prior year balance to the current year, through a confirmation, that might provide you enough evidence to be able to sign off on those prior year balances. Always, as an opening balance consideration, consider the appropriateness of the accounting policies that were used in creating those numbers from the prior year. They should be consistent with the current year policies. Then 540, accounting estimates. This was the one that I emphasized. It is an important one. I made the point that it is a revised statement coming out of the Clarity project, so it combines the old 540 and 545. It's a big statement. There's a lot of detail in it. It's not that you need to read through the entire statement, but it is worth spending time going through certain components of it. Now, the procedures to be working through. Paragraph 12 and 13, plus in the detailed explanatory paragraphs 13 to 28. Those are the ones to flag. Because what that starts to bring to bear, and these are the procedures that you're finding in those explanatory paragraphs. Has management applied the applicable IFRS framework as a starting point when auditing an accounting estimate? Obviously, if they haven't, there's a problem. Are the methods that they've used to determine that estimate appropriate, so reasonable, and are those methods consistent with the prior year? Have a look at subsequent events for evidence that confirms the estimate. So you made an estimate at year end, now it's 3 months post year end. Is there anything that's happened in that post year end period that confirms the amount of estimate that has been created? For example, if they created a provision for a legal claim, and that claim has then gone to court in the subsequent event period, that would now provide additional evidence to confirm the appropriateness and accuracy of that provision at year end. Test management's process as to how they arrived at the estimate. So what is the method of measurement that they've used to determine that estimate, and did they use any assumptions? And if they did make assumptions, consider whether those assumptions are reasonable. Test the operating effectiveness over any controls that the client is relying on in terms of determining that estimate. It's not often that that's going to be the case, that there will be controls. But if there are controls, test whether they are operating effectively. And then, and only then, would you then consider developing your own independent estimate. Now, when you've worked through this first lot, if management have applied the applicable framework, if the methods that they've used are appropriate and they are consistent, if subsequent events confirm the reliability of that number or accuracy of that number at year end, and if you're happy with management's process in arriving at the estimate that they've followed, well, then you don't need to develop your own independent estimate. This is only going to be applicable when you're not happy with something that's preceded this point. I mentioned this earlier, where you've got ISA 540, always consider the possibility of bringing in the use of either a management's expert or an auditor's expert. We'll talk about auditor's experts in more detail just now, but typically, because there's some subjectivity going on here, and because often there are assumptions that are being made, and they're often things that we're not that familiar with. Whether these are impairments, and remember, any impairment would be regarded as an accounting estimate. Any fair value adjustment is an accounting estimate. So where you're providing for stock obsolescence, where you're providing for PPE impairments, PPE revaluations, even the residual value determination is an accounting estimate. So you've got a fair amount there of opportunities to consider then bringing in the use of an expert and all the related procedures that go with the reliance on an auditor's expert. I think just be careful there. Look at the number of marks that are allocated. Obviously, if there's a large chunk of marks allocated to this particular account balance that you're looking at, then the suggestion is probably that they want you to go into detail regarding the use of experts. On the other hand, if you don't have a lot of marks allocated to it, maybe it's simply a one-liner considering the use of an auditor's expert in terms of ISA 620. Okay, there's no point going and putting down 20 ideas for a question that's only worth 5 marks. I mean, clearly their 5-mark question, much higher level in terms of answering that particular question.